Top 10 Tips for 2015 Canadian Tax Return, Part 1 Foot. Top 10 Tips for 2015 Canadian Tax Return is Basic Guide. The biggest challenge Canadian professional real estate investors face is tax time. It is important to have bit of knowledge and the latest changes. Flippingforprofit.ca intend to bring Canadian tax experts to bring awareness. Top 10 tips for 2015 Canadian tax return are provided as general terms, and you are urged to consult appropriate Canadian professionals to take care of complicated tax matters. Moving paperless. If you haven't registered yet for the Canada Revenue Agency CRA service My Account, you should go to cra.gc.ca/myaccount. It allows you to access and manage all of your personal tax information and correspondence with Canada Revenue Agency CRA online. On the front page of your tax return, be sure to register for online mail, and you'll receive an email notification anytime there is mail for you to view on the My Account online service. Your notice of assessment will arrive electronically this way. Go ahead, save some trees. Splitting income. Starting this year, you'll have the ability to claim the Family Tax Cut credit. Claim it on line 423 on Schedule 1 of your tax return. This credit will allow you to save up to $2,000 in taxes by effectively shifting part of the tax burden from a higher income spouse or common law partner to the one with a lower income. You'll have to meet the criteria and complete Schedule 1A, which has all the details. Tax-free savings accounts. Canadians can put another $5,500 into a tax-free savings account in 2014. Another $5,500 can be socked away in 2015, bringing total cumulative contribution room since 2009 to $36,500 as of this year. Amounts withdrawn from a TFSA in 2014 can also be recontributed this year, increasing 2015's available contribution room. Adoption expenses. If you're adopting, or have adopted, a child who is under 18 years of age, you may be able to claim up to $15,000 of adoption expenses, up from $11,774 previously. The expenses should be claimed in the year the adoption process ends. You can split the $15,000 limit between you and your spouse or common law partner, which can make sense if you are both in high tax brackets. Children's fitness amount. If you've paid fees for your child to participate in a prescribed program of physical activity, you can now claim up to $1,000 of those fees, up from $500 last year, which will provide tax savings in the form of a non-refundable credit. Realize capital losses to offset current year capital gains. If you have realized capital gains in the current year and unrecognized capital losses in other investments, consider disposing of the loss investments prior to the end of the calendar year in order to offset the capital gains. Lifetime Capital Gains Exemption LCGE. The LCGE is increased for indexation to $813,600 for 2015. Quebec announced an increase in their LCGE to $1 million for qualified farm and fishing property for 2015 and later years. Realize capital losses in 2015 to offset capital gains realized in 2012 to 2014. Capital losses can be carried back for 3 years to recover tax paid on capital gains. For example, a $100 capital loss in 2015 would trigger a $50 allowable capital loss. If you have no capital gains in 2015, this capital loss could be used to offset a capital gain in any of the 3 preceding years, from 2012 to 2014.